The telephone receiver slipped from my numb fingers, hitting the desk with a dull thud that somehow echoed through the sudden, hollow silence of my office. Moments before, the air had crackled with a torrent of accusations, a public shaming orchestrated with brutal precision by those I'd trusted most. The shouts, the frantic emails, the leaked documents, they'd coalesced into a deafening wave. But it was the abrupt, forced quiet that truly deafened me, leaving a ringing in my ears louder than any accusation. My meticulously constructed career, the edifice built brick by careful brick over 2 decades, had not merely crumbled, it had been detonated. The shock was physical, a cold tremor that ran deep, settling in my bones. While the world outside buzzed with the spectacle of my downfall, speculating on every detail, I sat there, observing the dust motes dancing in the afternoon light, processing the stark reality of an unjust violation. It wasn't just the betrayal, but the realization that the ground had been subtly eroded for months, not by chance, but by design. A ghost in the machine, whose manipulative moves had now fully come into focus as those of the infamous financier X. The silence was not peaceful. It was a vacuum waiting to be filled. The initial disorienting shock eventually gave way to a profound, almost surgical clarity. For weeks, my world had felt like a cacophony of questions and regrets, but then a different kind of quiet descended. I consciously cultivated this profound stillness, a stark contrast to the chaotic, reactive existence that had defined my life before. This wasn't despair transforming into petty rage. It was a cold, hard resolve solidifying, not for vengeance, but for strategic justice. I needed to rebuild, not just my finances, but my understanding. In the calm, I began to scrutinize the debris, searching for the hidden mechanisms of my downfall. My first step was entirely internal, to absorb and to learn. I started systematically studying the financial market dynamics, the intricate web of investments and regulations I had previously only skimmed. This quiet reflection was the fertile ground where the first meticulous seeds of my comeback were sown. The polished brass nameplate, once a symbol of shared ambition, now felt like a monument to a forgotten dream. We built Catalyst Global from scratch, an investment firm identifying overlooked opportunities and delivering robust, transparent returns. My strategies in emerging markets consistently unlocked significant value, establishing our formidable ethical reputation. We were, I believed, poised to redefine market standards. But beneath rapid success, a different agenda took root. My partners, Mark and David, chafed under the ethical boundaries we'd enshrined. Their ambition wasn't growth, it was unchecked control to manipulate market dynamics. Conversations grew hushed, coded around regulatory optimization and strategic reclassifications that increasingly blurred legal lines. The bright potential of our past was eclipsed by an insidious shadow of betrayal, twisting founding principles into tools for their gain. The firm's high stakes became less about sound investing and more about their insatiable hunger for absolute dominion, an endgame I was beginning to comprehend. The noise of their accusations faded, replaced by the humming of my trading screen. They expected an emotional outburst, a public fight. Instead, I consciously outlined my overarching strategy to master the psychological game of the markets, exposing their vulnerabilities using data, not raw emotion. Their aggressive tactics were predictable, loud, and easily traceable. My methodology, however, became a quiet, evolving algorithm of resilience. I spent hours learning to read the market's subtle rhythm on the screen, its true, nuanced language, offering far more truth than their bluster ever could. Have you ever found yourself in a situation where silence was your most potent weapon? This calculated approach was about understanding leverage, patiently anticipating the precise moment to move, not seeking noisy confrontation. The quiet in my apartment was a stark contrast to the cacophony of their public victory laps, a silence I cultivated as carefully as I dissected every piece of data. While they gloated in newspaper headlines and on financial news segments, oblivious to any real threat, I was charting their demise, pixel by pixel, transaction by transaction. What began as an intuition soon solidified into months of painstaking research, operating entirely in the background, a ghost in their machine, invisible but ever present. My initial focus was on market patterns. I subscribed to premium financial analytics, poring over Bloomberg terminal data, scrutinizing historical trading charts, and cross-referencing public statements with quarterly earnings reports. Screenshots became my currency, timestamps and data points documenting every anomalous spike, every suspicious dip that benefited their inner circle. Their public posturing spoke of transparent dealings and ethical growth, yet the digital breadcrumbs suggested a different story entirely. I compiled binders, both physical and cloud-based, filled with audited financial statements, email correspondence gleaned from public disclosures, and even legally recorded investor calls where their tone often belied their official narrative. Then came the true pattern interrupt, a discovery that shifted my entire strategic outlook. While tracing a series of seemingly innocuous offshore transfers, I stumbled upon Viridian Acquisitions LLC, a shell corporation registered in Delaware with an obscured beneficial ownership structure. It wasn't just the secrecy, it was the inconsistent registration dates, the minimal capital, and the suspiciously large sporadic payments flowing through it, often coinciding with significant market movements in their favor. This wasn't merely aggressive market play. This smelled of something far more systemic, a potential legal vulnerability beyond simple ethical lapses. Viridian was the missing piece, an undeniable artifact suggesting a deliberate mechanism for questionable transactions. It was a stark juxtaposition to their meticulously curated public image. The shift was immediate. My meticulous planning veered sharply from proving market manipulation to establishing deeper, more serious legal leverage. The silent playbook was no longer just about financial misdeeds. It was now about corporate malfeasance, a potential legal and ethical landmine that they, in their arrogant confidence, had completely failed to acknowledge. I had the entity. Now I needed to connect the dots to their operations, firmly and methodically. The market, a roaring beast, became my quiet canvas. That Monday, analysis confirmed, strategic points identified. I initiated the first trade. It wasn't a crash, but a whisper, a precise tremor targeting their most exposed holdings. Layers of obscure brokerage accounts and meticulously timed microtransactions left each move untraceable, an anonymous current in the digital ocean of finance. I knew they wouldn't notice immediately. Their customary arrogance dictated they'd dismiss any minor dip as typical market noise or a general correction. I pictured them, smug, their empire impenetrable, but a single ripple, then another, began to tell a different story. The small, inexplicable erosion of projected cash flow, the unexpected pressure on liquidity weren't random. The figures, unalarming to outsiders, felt wrong to them. Their financial facade produced disquieting creaks. It wasn't a collapse, but a persistent internal vibration, questioning their very foundation. They realized something was amiss, an unseen hand subtly nudging their world off balance. The game, for them, had quietly begun. The deceptive calm that settled after my initial moves soon gave way to the predictable churn of desperation. Their financial house, built on a foundation of borrowed time and inflated projections, began to wobble visibly. Instead of a strategic retreat, they chose impulsive lashing out, selling off illiquid assets at steep discounts and scrambling for high-interest bridging loans, creating a financial panic discernible even to a casual observer. I watched, not with anger, but with the quiet precision of an investor recognizing an inevitable market correction. This was their volatility trap, and I was merely observing its mechanics. I initiated short-selling positions on their publicly traded ventures, leveraging a carefully secured $50,000 line of credit to provide a buffer for these calculated plays. Simultaneously, my attorney discreetly filed preliminary inquiries with the SEC and FINRA, highlighting specific dubious trading practices and undisclosed related party transactions I'd meticulously documented. These weren't accusations, but professional questions posed to the right regulatory bodies. I knew such inquiries would take weeks, sometimes months, to gain traction beyond an initial review, a small friction I had factored in. Their frenzied activity, combined with the subtle pressure of market skepticism and regulatory scrutiny, triggered the first wave of margin calls. The precise email from their brokerage arrived on September 12th at 9:07 a.m., notifying them of a $280,000 deficit they needed to cover by end of day. While their world spiraled into noisy chaos, mine remained serene. This financial tremor was merely proving the integrity of my calculations, setting the stage for the deeper exposures yet to come. The polished mahogany of the boardroom table reflected my calm, but inside I felt the sharp clarity of years of quiet preparation. The The air in that room, usually thick with bravado and empty promises, was now charged with an undeniable tension. Across from me, Financier X fidgeted, his usual swagger replaced by a nervous energy that vibrated in stark contrast to my stillness. This wasn't a negotiation, it was a reckoning. When the arbitrator nodded for me to begin, I didn't raise my voice. Instead, I laid out my case with the precision of a surgeon, page by meticulously numbered page. Each audit report, every time-stamped email, every bank transfer record clicked into place, forming an irrefutable digital and paper trail of his intricate scheme. While he grew increasingly agitated, interrupting with denials and desperate deflections, I merely projected the next piece of evidence onto the screen. The financial models he'd manipulated, the ghost companies he'd incorporated, the client funds he'd diverted, it all unwound, exposed. His last-ditch attempts at blame dissolved under the weight of cold, hard facts. The open loop from months ago, the casual lie that had started it all, was now completely sealed, leaving him professionally exposed and utterly financially ruined. The silence that followed my final slide was absolute, marking the undeniable end of his reign. The quiet that settled after the final paper signed wasn't empty. It vibrated with a profound freedom I hadn't truly felt in years. Where I once navigated a landscape choked with others' agendas, now stretched an open, limitless horizon, clear and inviting. I channeled that energy into the consulting firm I'd envisioned, building it solely on my own ethical terms. Every decision, from client selection to partnerships, was steeped in ethics I'd long suppressed. No more chasing validation, only purposeful growth. Watching metrics populate the screen, positive feedback illuminating my inbox, or a project Gantt chart unfold felt like sunlight after a long, dark winter. My boundaries were non-negotiable. Time and expertise were investments, not endless resources for others' demands. The burden of their schemes had been replaced by the lightness of authentic purpose. What's one challenge you're ready to face with a mastered mindset shaping your own horizon? Looking back, it's easy to chart the shift, not just in my portfolio, but in my very DNA. The woman who once sought validation from external approvals, who absorbed betrayal like a personal flaw, had finally receded. In her place emerged a strategist forged in fire, her confidence not a veneer but a foundational truth, built stone by painstaking stone. I realized my mastery wasn't just over financial instruments or legal precedents, it was over mindset itself. My new currency wasn't revenge, but clarity and an unwavering commitment to a future I meticulously crafted. I now focus on establishing a new benchmark in finance, one rooted in transparency, long-term value, and genuine empowerment, not just for myself, but for those who seek to build their own quiet empires. My past self might have reacted with anger, but this version of me operates with calm, calculated intent. My silence, once perceived as weakness, had become my greatest asset, a deep well of observation, planning, and focused execution that few saw coming. Where they once heard nothing, I was hearing everything. If there's one lesson I carried forward, it's that true power isn't shouted, it's demonstrated. They saw a victim. I became the market's quiet force.